Let's get across the market open now. Chris Weston joining us from Pepperstone. Chris, welcome back to you. Just taking a look at that session just gone on global markets, very much a focus on tech and AI. What have you seen there?
Well, I mean, that's been the outperformer. I mean, Tesla did really well. Meta also put in some points, and Tesla had a really good gain. But yeah, I think if you're looking at the tech sector more broadly, I think that was the space to go. I mean, it's been out of favour the last few weeks, and some people have used parts of it as a funding to push into other areas. But all Mag 7 stocks, apart from I think Microsoft, were higher on the day. And we saw, memory working quite well. I mean, obviously that's been in focus this morning. I don't know, Samsung have come out with their preliminary earnings ahead of their full year, their main numbers, which come out on the 29th of July. But certainly, people are going to be looking at Samsung Electric's numbers because obviously they're a big part of the AI memory space, along with Micron and SK Hynix as well. So we're looking at seeing how the Kospi trades, and that should see Nasdaq futures and various parts of the tech system, the Nikkei looking pretty interesting today. But AMD's had a really strong day. That looks like it's refound its mojo again. It's been an absolute superstar for 2026, and we'll see if that can push higher into earnings. Broadcom as well, having a good gain. So some of the chips did really well. But I think it's sort of broad-based tech, hardware, Dell also firing up as well. So everyone's sort of, whether this is a lasting effect, maybe this is some short covering, some tactical short covering, maybe this is people re-engaging ahead of earnings, but we are seeing that space looking the goods today.
Yeah, interesting. Dell got the boost from President Trump saying everyone should go and buy a Dell computer, and then it's revealed that in fact he bought about $5 million worth of shares earlier in the year.
Oh, well, that wouldn't surprise at all. I mean, if you can get access to his trade, he's done very well. I mean, he has done in crypto as well. I think last year in his filings, he made a ridiculous profit coming through in the crypto scene as well. So Trump the trader.
Yes, indeed. Now, Chris, you mentioned SK Hynix, so ADR's joining the index later in the week. Also, you got SpaceX inclusion in the Nasdaq, so that's going to sort of be a further boost, you think?
Well, a lot of the buying took place on the close today. If you're running the ETF, you would have been buying today. And we did see, I think, 155 million shares accumulated on the close in the auction there. So, that's already taking place now. A lot of people are getting very excited about its inclusion into the Nasdaq, as this idea about passive flows into ETF index tracking funds sort of manifests, and the idea that, you're going to get these daily rebalances, and that's going to cause a lot of the fund moves going higher. But I don't see that myself. I mean, its weighting in the Nasdaq is going to be very small, given that it's a free float adjusted weighting that you use rather than the actual total market cap. One thing I think is pretty clear for me, though, is less about the idea that you're going to get all these flows coming in and it's going to boost the stock. I don't think that's going to be the case. History has shown that when companies go to IPO and then they finally are included into one of the benchmarks, it doesn't actually have that big an effect. What I do think is going to happen is it's similar to SK Hynix and what we've seen there in Korea, where we've seen these leveraged single stock ETFs coming through, as well as the index passive flows, is I think it will increase the daily variance in the stock. If the stock's up 4% because the Nasdaq's up 1%, what you're going to see then is you're going to see a lot of tracking funds coming in, and it's going to be leveraged ETF buying at the close. People know it will happen. People will front run that. You're going to get the options flows taking place. So I think at the very least what it's going to do is it's just going to increase the volatility that you're going to see in the stock on a daily basis, rather than everyone's going to rush out and buy it because suddenly all these index tracking flows need to include it into their benchmarks.
So fairly quiet macro-wise this week, although the FOMC minutes is obviously going to be in focus.
Yeah, they should do. Obviously, they don't. The minutes don't include what we saw from the jobs numbers, and I don't think that the jobs numbers that we saw on Friday or Thursday will necessarily derail the situation. I think that what it does is it shows that the labour market is stable. Obviously, we've seen the jobless claims numbers, they're still very low. We saw the JOLTS report showing job openings are increasing. So the labour market's in reasonable health. But I think what most people have suggested from the NFP numbers was that it probably takes a July rate hike off the table. And of course, when we look at those minutes, they are reflective of that June FOMC minutes, where we saw 2-year Treasury yields at 15 basis points or so, which is the biggest single day reaction to a first Fed chair that we've seen, I think, since 1978. So the market, it was a very volatile session there, and I think we'll get a chance then to explore just the meanings around the dots, just how intense they are about raising rates nearer term, and those trigger points as well. So look, it was a really volatile June FOMC, and these minutes will sort of just give us a deeper dive around that. So there could be a little bit of volatility around that, but as I say, they don't actually include the NFP numbers that we just saw the other day.
What are you seeing in FX at the moment? That US yen carry trade alive and well?
Oh yeah, carry's been the flavour du jour this year, isn't it?
Yeah.
I mean, you've got all the hallmarks that you really need. I mean, you've got low volatility. In FX markets, the volatility implied and realised has been super low this year. It's a little bit higher in the rates markets, and that's probably been a factor that Kevin Walsh is injecting some uncertainty into future decisions by reducing that forward guidance. But for low intensities, you've seen the VIX 15, 16%. You need low volatility. You need positively sloping and trending or grinding sideways equity markets, credit spreads tight, and then people go into those relative interest rate differentials, and that's where carry works. And so you've got so much of the carry trade working. Brazil, Mexico, they've just been killing it this year. Their currencies have been doing very well. Hungary, their currencies, anything with a high yielding currency, and if you look at it on a volatility adjusted basis, is doing really, really well. And you're using the yen as your funding currency for that. The Bank of Japan has lost some credibility as well. People are seeing them behind the curve. They've got fiscal issues. That'll come in today. We've got a 30-year JGB auction coming through. I think the takedown should be pretty good. I don't know, I'm not sort of sizes, but I think it should be reasonably well digested. I think the dealers there will be tasked with taking that down very nicely indeed. But we've seen big volatility in long in JGBs as people are questioning that sort of discipline around the fiscal situation and how they get out of this mess. And that credibility issue is causing the yen to be the funding currency and the low yielder. So, it's been all in carry. The problem is that because such a crowded trade, when we do get that situation, when we get that volatility burst, an outlier sort of tail event coming through, and if it does kick, those carry trades are very, very quick to be unwound, and that causes massive volatility in itself. So, at the moment, all in on carry, we like it, and dollar yen's been one of those sort of plays that you get as well. So dollar yen back above 162. Could we get more intervention risk? Well, I think what's really interesting here is that the Ministry of Finance have announced that they've changed the way that they're going to calibrate this one with markets. So instead of years gone by, telling everyone that they're checking rates and going through this process to sort of give us an indication when it's going to happen, they're sort of saying now, no, it's going to happen. We're going to give you that element of surprise. And if you're on the wrong side of that, it's going to hurt you, at least in the short term.